Okay. Hello, class. Great meeting you. Hello, class. Great meeting you again. I'm still your host, Teacher Mutawi Kizito. So we are continuing with our discussion, interaction with the two-column cash book. Last time we met, we prepared the second example of the two-column cash book for Bank T. However, we never prepared the ledger accounts. I requested for your response. I only received response from one person whom I reacted to, but the rest I never got any response. So let us continue and prepare the different ledger accounts for that particular example for Bank T. So that after preparing those ledger accounts, then we can safely move on to another item, which is now the three-column cash book. So let us begin. Get your notes, get your pen, and then we start recording together the relevant ledger accounts after that two-column cash book for Bank T. Are we ready, class? Good. You are ready. That is wonderful. Okay, our example under Bank T, it talked about someone starting business with a given amount of money. So he said when you start business, that one we call it capital. And you realize that in our two-column cash book earlier, we recorded their capital on the debit side of the cash book. On the debit side of the cash book, we recorded capital. So, because capital was on the debit side of the cash book, remember our principle of double entry, one account gains, another one must do what? Must lose or give out. So, because capital was on the debit of the cash book, it implies that when you go to open up a capital account, now you are going to record on its credit what? Side. You are going to open a capital account and record on the credit side. Why? Because it appeared on the debit side of the cash book. So anything that is on the debit, when you go to the respective account, you credit. Anything which is on the credit, when you go to the respective account, you are going to debit. Hope that one, members, you still remember very well. You still remember very well. Okay, let us open up our capital account. Let us open up our capital account. Okay, so you come and draw your capital account. Members, you should all be attentive, for this is our last in line with two-column cash book. So you open up your capital account. Come and say capital account. Capital account. Name the sides very well. Name the sides very well. Remember the units and the date and month. Month and year. So it is December 2020. December 2020. Because capital was on the debit, then here you're going to credit the capital what? Account. So on first, capital gave out to cash. How much was it? 600 what? 600,000. Is there any other account we are going to record in the capital account? No. So because there is no any other account, now you can balance off your capital account. And this time around, I'm not going to balance for you, so you can balance for yourselves. Let me move on to another account. Okay. So after the capital account, what is the next account following? Class, can someone identify the next account coming up? So when you check the transaction on second, open bank account and banked that money. That one was a contra entry when you check in your two-column cash book. So it affected both cash and bank. So that one we said we don't record in the ledger accounts. We don't record cash account and bank account in the ledger accounts. So implying that one you skip. So you move on to another account. Transaction on fourth, bought goods by cash. And you said when you buy goods, that one we call it purchases. So implying that now you need to open up a purchases what? Account. You need to open up a purchases account in your ledger account. So you have your purchases account. So you are going to identify all the transactions that affect the purchases account. So you look through your cash book and also look through the transactions. Say that because you have some transactions where you buy on credit and you never recorded in the cash book. So that's why it is very important to follow the transactions as they appear. Say that you don't rely only on what you prepared in your cash book. If you look at only the cash book, you risk skipping or leaving out some transactions which never appeared in the cash book. That is the credit transactions. So always refer back to your transactions as you're opening up the relevant ledger accounts. So now let us identify the different transactions that affect the purchases what? Account. The first one is there on 4th. So on 4th we have bought goods by cash. So implying that when you look at our cash book, we credited the cash account. So that means in the purchases account we are going to debit. So you come here and say 4th purchases received from cash. How much was it? 100,000. 100,000. Then look for another transaction that affects what? Purchases. Look for another transaction that affects purchases. And that transaction is there on 16th. Is there on 16th. So on 16th it says bought goods on credit from Kate. Bought goods on credit from Kate. Remember that transaction never appeared in the cash book. Do you remember that? We left it out because it was a credit transaction. So here you come and complete it very well. Bought goods on credit from Kate. So it affects the purchases account, implying that purchases were gaining. So on 16th, purchases gained from Kate. How much was it? It was 300,000. 300,000. So when you come to Katie's account, you are going to open that transaction again in Katie's account. You are going to open it again in Katie's account. So to avoid forgetting, you can even create your Katie's account somewhere. Katie's account. Name it very well. Say that you can complete double entry there, and then otherwise you risk forgetting about it. 2020. So here purchases received, implying that now Katie's account will be giving out to purchases. Will be giving out to purchases. How much? 300,000 shillings. 300,000 shillings. So for such a transaction you have to complete its double entry within the ledgers. Bought goods on credit from Kate. You never recorded anything in the cash book. So here you complete double entry. Record here purchases gaining. Then also in Katie's account, Katie's account was doing what? Giving out, because you bought goods from who? From Kate. Okay, let's go back to our purchases account. That was the transaction on 16th. Which other transaction affects the purchases account, class? Which other account affects the purchases account? If you check in your transactions. So if you check the transactions, we don't have any other account, any other transaction affecting the purchases account. So if you confirm that that's all you can record in the purchases account, now you can go ahead and do what? And balance off your purchases account. Class, go ahead and balance it off. Okay, this time around I'm not balancing for you, because I believe you have mastered how to balance the ledger accounts. Okay, now let us move to another transaction. Which other account is supposed to appear when you look at the transactions. So after purchases, you have there the sales what? Account. You have the sales account. So you can now create your sales account. So what is the first transaction in the sales account? You have the transaction on 6th, which says cash sales 40,000. Cash sales 40,000. So if they are cash sales, remember in the cash book we debited the cash. So implying that in the sales account we are going to credit. And members should observe that the sales account is ever giving out. Sales account is ever giving out. So you cannot record the sales account receiving anything in the debit. So you come here and record on 6th. Sales account gave out to cash. How much was it? 40,000. 40,000. Then look through the information. Is there any other account that affects sales? Yes. Another account that affects sales is there on 12th. Cash sales paid direct into the bank on 12th. So on 12th, cash sales paid direct into the bank. So how do we record that one? Remember, in our cash book, cash sales paid direct into the bank, we recorded on the debit side in the bank column. So implying that we come to the credit side on 12th. So here it will be bank. How much was it? It was 100,000. It was 100,000. So we have recorded in the sales what? Account. Look through the information again. Which other account affects sales? Which other transaction affects the sales what? Account. So paid stationery, bought goods, blah blah. Which other one? Which other account affects the sales? Realize that we have the transaction on 17th. The transaction on 17th. Are you seeing it, class? The transaction on 17th is also affecting the sales account. Transaction on 17th is also affecting the sales account. What does it say? Sold goods and received the what? And received the check. So implying that sales gave out to bank. Still, so you have bank. And then how much was it? It was 80,000 shillings. Okay. Then which other account affects sales? We have another account on 19th. So you come on 19th still. Sold goods on credit to Patel. So here we gave to Patel. So the same applies to this transaction. It was on credit. It was on credit. So implying that we never recorded it in the cash book. So if you reach such a transaction, you complete its double entry so that you don't forget. So if you realize that you sold on credit, so you have sales account and Patel's account. So you can proceed and open up also Patel's account. You can proceed and open up Patel's account. Patel's what? Account. Because now sales is giving out, it implies now Patel will be receiving from sales. How much? 30,000 shillings. Class, always note those transactions on credit that you never recorded in the cash book. Otherwise, if you record only in one account, that means you never completed double entry. Because when you record in the cash book, it's part of the double entry. So if you never recorded that transaction there, that means when you come to the ledgers, you have to complete its double entry. Both accounts must be opened up. And remember, an account is opened up once. So don't open up Patel's account like 3 times because Patel appears thrice. No. You see, the sales account is 1. Any account that affects sales, any transaction, the information is put in the sales what? Account. But we are not having 4 sales accounts or 5 sales what? Accounts. Hope that one is noted, members. Okay, so we are still in our sales account trying to look for the transactions that affect the sales account. We ended with the transaction on 19th, which was about a credit transaction to Patel, sold goods on credit to Patel. Then we can also look at the transaction on 23rd, also affects the sales. So on 23rd, that was on cash. So 23rd, cash. So you see that in the cash book we debited. So here we are going to credit. So you just follow. Cash sales 150,000. 150,000. We have recorded that transaction. Then which other transaction affect the sales account? We have the transaction on 26th. We have the transaction on 26th. Sold goods and received a check. So 26th, because it was a check, that means it is bank that was affected. How much was it? 100,000. 100,000. Okay. Which other account affects sales class? Who has seen it? Who has seen that account? Which other transaction that affects the sales account after that one? After the transaction on 26th? Yes, someone has already saw the transaction on 28th. The transaction on 28th. Cash sales. Cash sales. So you come and record 28th. So this is cash. How much was it? It was 80,000. It was 80,000. Any other account that affected the sales? No. Those are the accounts that affected the what? Those are the transactions that affected the sales account. So if you confirm that you are done with the transactions that affect the sales account, you can now proceed and balance off your sales what? Account. I believe you have mastered how we balance off the different ledger accounts, including even the cash books. Okay, we are moving, members. Hope you are following very well. So we proceed and draw another ledger account. When you look at our transaction, what is the next ledger account we need to identify? What is the next ledger account? So we have now rent. We have the account for rent. So you proceed and draw the rent account. The rent on 9th paid rent for the business by check. In the cash book, cash lost. The cash book lost, but through the bank, because it was by check, so the bank column lost. So implying that when you come to the rent account is going to gain. So you come on the debit side, which is a gaining what? A gaining side, and say 9th rent gained from bank because it was by check. How much was it? How much was our rent? The rent was worth 50,000 shillings. It was worth 50,000 shillings. Then checking the information. Do we have any other transaction that affects the rent account? So when you peruse through, you see that we don't have any other transaction that is going to affect the rent account. Once you confirm that, you can proceed and balance off your what? Your rent account. Remember, I promised today I'm not going to balance for you the ledger accounts because I know you have mastered. So after you balance the ledger account. Never leave any account open. Otherwise, someone will come and record there his or her own transactions and you end up making losses. Okay. What is the next ledger account, class? So our next ledger account, according to the transactions, now we need to open up the stationery account. So let us open up the stationery account. Stationery account. The transaction on 13th. Stationery gave out. Received. That means cash lost. So now we are going to debit the stationery account on 13th. Stationery received from cash because we paid for stationery. How much? 10,000. Then you ask yourself a question: is there any other transaction affecting the stationery account? So when you peruse, you don't see any other account affecting what? Stationery. So you can proceed and close. Then we move on. Identify the next ledger account. Who has identified the next ledger account? We are going to draw. What's the next ledger account? So we have the account for Kate. We have the account for Kate. We have Kate's account. On 16th, bought goods on credit from Kate. So that means the first transaction there, Kate lost. Remember, we have already completed our entry for that. I'm just repeating it again. Those ones who have already drawn it, please don't repeat again. We have only one account for Kate. So if you have already drawn the account for Kate, don't draw it again. I'm repeating for illustration because I had to rub off mine. Okay, so you bought from credit, goods on credit from Kate, 300,000. 300 what? 1,000. Then checking the information. Is there any other transaction that is going to affect Katie's account? So when you check, we have a transaction on 24th, which says settled part of Katie's debt by check. Settled part of Katie's debt by check. And remember, in our cash book, how did we record? You check. How did we record that transaction? In our cash book, bank lost. Bank lost the transaction on 24th. So we recorded on the credit side in the cash book in the bank column. So implying that now Kate is receiving because we are settling the account. We are paying. To settle the account means paying someone. So you come, because we are paying Kate on 24th, that means Kate received from where? From the bank. How much was it? 60,000. It was just part of the debt. So 60,000. Then check again which other account transaction is affecting Katie's account. We have a transaction where we have a dishonored check. Can you check through the transactions class where we have a dishonored check? Remember, the check was paid to Kate, but now the bank dishonored it, and we recorded on the debit side in the bank column in our cash book. So implying that now when we come to Katie's account, we are going to go to the credit side that it cancels out. Remember how we explained that. So now on 30th, because we recorded on the debit of the cash, now we record on the credit. It is cancelling out because of bank. How much? It was 60,000, the one we had paid Kate. So if it cancels out this and that, that means Kate still demands us 300,000. So those are the items we can record in Katie's account. The items we can record in Katie's account. Once you confirm that, then you can proceed and balance off. Okay, so now let someone identify for us the next what? The next account. What is the next account we are going to draw? after Kate, which account follows when you look at the transactions in their order? Remember, we have already recorded the sales, so you can't go to sales. Now the next account, you can record Patel's what? Account. You can record Patel's account. Patel's account. Okay. Sorry. So, thank you. Someone has identified that we are supposed to record Patel's account. Patel's account. Okay, the first transaction under Patel is on which date? The first transaction for Patel is there on 19th. Sold goods on credit to Patel. Remember, I had also drawn this one earlier on. I'm repeating simply for illustration what purposes. But for if you have already captured Patel's account, please don't repeat. Remember, we said we record the account once. You don't draw two ledger accounts of the same what? Patel. So if you already have Patel's account, don't repeat. But me, I had rubbed off mine. So sold goods on credit to Patel, implying that Patel was receiving this time around on 19th. Remember, the sales account lost. So Patel received from sales, how much was it? 30,000 shillings. Then check in the transactions. Is there any transaction to be recorded in Patel's account? The answer is no. That's all we can record. Then you can balance off the account and then move to another ledger account. Okay, who can identify for us the next ledger account? What's the next ledger account we are going to draw? Okay, thank you. So we are going to draw now the wages account. We are going to draw the wages account. Paid wages cash. So the cash book close to the cash column. So now that means the wages account is gaining from cash. How much was it? 20,000 shillings. 20,000 shillings. So anything to record in the wages account? Nothing. So you can also proceed and balance off this particular ledger account. And then we identify another account. You see, class, things are getting simpler and simpler as we proceed. In case you have any question, please. I gave you my number, but I can repeat for those who missed. Can pick the number in case you have any question, you are challenged somewhere, you contact me on that WhatsApp number. Okay, so we are done with the wages, we are done with Kate. So what is the next account? The next account is the drawings account. Drawings, the transaction on 24th, withdrew cash for personal use. So you draw your drawings what? Drawings account. And remember, because we are withdrawing money, the cash lost. So implying that now the drawings account is going to gain. Okay, so you come on the debit side of your drawings account and record the date 27th. Drawings received from cash. How much was it? it was 10,000, not 25. It was 10,000. It was 10,000. So any other transaction to record? No. So you can also proceed and balance off the drawings account. Balance off the drawings account. So, class, what is the last transaction we are recording? Who can identify for us the last transaction? Which transaction, which account is missing? Okay, thank you. So the next transaction and the last one is the account for the loan. Stanbic loan. Stanbic loan account. Stanbic loan account. Remember the Stanbic loan account, bank gained. So implying that the loan account is going to give out to lose. Is it okay? So you move to the credit side and record. What was the date? The date was 31st. The loan account gave out to bank. How much was it? It was 500,000. Wow, that was too much money. 500,000. I wish I can get that one. 500,000. So that's how you record in the Stanbic loan account. So class, we have completed all our ledger accounts. We have completed all our ledger accounts and balanced them very well. So I hope you have learned something great when it comes to preparation of a 2-column cash book, as well as opening up the relevant ledger accounts. And you don't stop at that. You proceed and also balance the different accounts, the different ledger accounts, including also the cash book. So, having done that, now we can graduate to another level. We can now graduate to a higher level. Because now 2-column cash book, it is very clear, it is very okay. So now, let us graduate at this moment. And we talk about another cash book. So this one, we are going to call it a 3-column cash book. We are going to call it a 3-column cash book. 3-column cash book. 3-column cash book. 3-column cash book. Why do we call it a 3-column, not 2? Simply because it has 3 columns of amount. It has 3 amount columns. That is why we call it a 3-column cash book. The previous one was a 2-column because it had only 2 amount columns. The one for cash and the other one for bank. So this one is a 3-column because it has 3 amount columns. What are those columns, class? The columns making up a 3-column cash book, the amount columns. The amount columns include the first one, we have the discount columns. Then we have the cash column. We have the cash column. And then lastly we have the bank what? We have the bank column. Hence the name 3-column what? Cash book. Hence the name 3-column cash book. Hope that one is clear, class. So that's why, that's the genesis of the name 3-column what? Cash book. Okay. Cash, bank, those are the usual we have been recording. Maybe I can explain something to do with the discount what? Columns. The discount columns. Why do we have discount columns this time around? Class, you realize that sometimes you buy goods. You buy goods and they give you a discount. And they give you what? A discount. And what is a discount? A discount is a reduction. reduction in the original price of a product. Reduction in the original price of a product due to payment of cash or due to buying in large quantities. That one is a discount. So when you buy in large quantities, the seller can give you a discount and says, instead of charging you 50,000, I'm giving you a discount of 10,000. 10 what? 1,000. So implying that you are not going to pay 50,000 at the end. No. You are going to pay 50,000 less 10% discount, which is 5,000. So implying that the actual amount of money to be paid will be 4,500 because you have received a what? A discount when you buy. But at the same time, even our businesses, when we sell, we also give discounts. We allow discounts to our customers. So, you receive a discount, you also allow a discount. So, in such situations, an entrepreneur is supposed to operate what we call a 3-column cash book, so that you can cater for these what? Discounts, so that you can cater for the different discounts. So now let us look at the different types of discounts given in the cash book. So in our 3-column cash book, we are going to have what we call a discount received, and also a discount allowed. That's how we are going to name those columns. A discount received on the credit side and a discount allowed on the debit side. I believe by now someone is starting to see the format of our 3-column cash book. Discount received on the credit side, discount allowed on the debit side. Discount allowed on the debit side. Why do we have the discount received on the credit side? Credit, which is giving out. Because the business receives it. But you receive it because you are paying out somewhat money. You are buying goods. And remember, when you buy, your cash or bank gives out, which is on the credit side. So that explains why the discount received is on the credit side. Is it clear, class? The discount received is on the credit side because you get that discount when you are paying. And when you are paying, the cash book is giving out. So that's why you have the discount received on the credit. And the reverse is true for the discount allowed. So the discount allowed is on the debit side of the cash book. Why? Because you allow that discount when you are receiving money from the different debtors. So if people are paying you, allow them a discount. And when they are paying you, that means you are receiving. So it is on the debit side, cash or bank receiving. So you allow. So that's why the discount allowed is on the debit side. Hope that one is clear, class. So master that. Discount allowed, debit side. Discount received, credit side. Discount received, credit side. Discount allowed, debit side. Note that one down. Not to forget. Note that one down so that you don't forget. So, in brief, what is the format of our 3-column cash book? What is the format of our 3-column cash book? Let me draw it here. But you can also generate the format because we are only adding there the discount columns. And you know the side now on which the discount received and discount allowed belong. Okay. So, if this is our 3-column cash book, you have your debit side, you have your credit side. On top you have the name of the what? The business and title, everything. So you have the date, you have the details, you have the folio, then you have the discount allowed on the debit what? On the debit side. Then you have cash and then bank. You have cash and then bank. Do the same on the opposite what? Side. Date, details, folio, discount, received, cash, and then bank. Cash and then bank. So class, that is the format of our 3-column cash book. This is the format of our 3-column cash book. Rule it very well. So if you are asked to draw a 3-column cash book, these are the columns making up a 3-column cash book. Those are the columns making up a 3-column cash book. Date, details, folio, discount allowed, cash, bank. That is on the debit. Do the same on the opposite side. Date, details, folio, discount received, cash, bank. Discount received on the credit side, discount allowed on the debit side. Hope that one is clear, class. Remember, every column for amount, you put there the units. Shillings. 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 Both sides. Shillings. Okay. So, in case you are given a question, to prepare a 3-column cash book, that's how it should look like. That's how it should look like. Okay. Can we look at an example? Yes, we can look at an example. We can look at an example of a 3-column cash book. Okay, let us turn to our notes and then we check example 1 for Mr. Okot. Mr. who? Mr. Okot. Mr. Okot had the following transactions in his business during the month of June 2017. During the month of June 2017. Okay, so that opening statement gives you the title of our 3-column cash book. So can we proceed and draw our 3-column cash book? Begin with the title, the business name in the first line, type of book, 3-column cash book in the second line, and then the period in the third line. Can we do that together, class? So the name is Mr. Okot. Then in the second line you say 3-column what? Cash book. 3-column cash book. For which period? For the month. For the month of June. For the month of June 2017. For the month of June 2017. So, you already have your tick there. You already have your what? Your tick for a correct title. For a correct title. So you have your tick. So now, similar transactions except for the discounts. So if you mastered how to record in the 2-column, even this one you are going to record very smoothly, very well. The only thing that changes are the discounts. And when you have a discount, that means you simply need to know how to subtract. As simple as that. So you subtract, get the discount, record it, then get the balance, put it there. You are good to go. Okay, let us begin our transactions. June 1st balance brought down cash 25 bank shillings. That one we already recorded. We saw it in one of the transactions, the examples in the 2-column cash book. Balance brought down. We said if it is not started business, then you don't call it capital. You simply record balance brought forward. So on first, you have your balance brought forward. It becomes brought forward now for the current period, not down. For cash, 25,000. 25 what? 1,000. And then for bank, 74,000. 74,000. Okay, members, let us record our date, which is June 2017. June 2017. So that we don't keep repeating the month and the year. Okay, then on June 2nd, bought goods and paid by check. So we bought goods, we paid by check. That means we lost money. We gave out money. So you come on the credit side, which is a giving side, and record on 2nd. You gave out money to purchases. It was by check, so that means it is the bank column which lost. How much was it? 20,000. 20,000. Then you proceed, come to the next transaction on 3rd, which says 3rd cash sales 18. So you come and record cash sale. That means you are receiving what? Money. We are receiving money. So we come to the debit side, which is the receiving what? The receiving side, and record. We are receiving from sales. How much is it? 18,000. By check, by bank, by cash. By cash, 18,000. So you come in the cash what? In the cash column. Okay. We can proceed. Now we move to the transaction on 8th. Bank to cash. We have already seen a similar transaction. Bank to cash. You took money from your business safe. That means cash is losing there, and then deposited it in the bank. Bank gained. And that one we call it a contra what? A contra entry. A transaction that affects both cash and bank at the same what? At the same time. So you come bank to cash on 8th. So you have bank here. It's a contra entry. Cash is losing 20,000. 20 what? 1,000. So on the same date, on 8th, bank gained from cash, the contra entry. How much? 20 what? 20,000. 20,000. Are we following, class? Are we following very well? Let's master how to record in our cash book. Okay, so let us continue to another transaction on 18th. The transaction on 18th says, received a check. Received a check. In each case, discount allowed. Now our discount has come into play. Received a check. In each case, discount allowed to those different people. Agnes, 40,000. Benjamin, 30. Matthew, 32. But you allowed them a discount. You allowed them a what? A discount. So, if originally you demanded 40,000 from Benjamin, from Agnes, how much did you receive from Agnes after giving her a discount of 5%? So you need to calculate now. Get a calculator and then you count. Get your discount. What is 5% of 40,000? 5% of 40,000. That 5 divided by 100 times 40. Okay? So, because we are receiving, that means it is a discount what? Allowed. It is a discount allowed. Because we are receiving a check, if you are paying out, that's when it becomes a discount received. So this one is a discount allowed. So you come, first record, and then you see how to position. So on 18th, you have, we are receiving from who? We are receiving from Agnes. Then you're also going to receive from, on the same date, we are also going to receive from Benjamin. We are not stopping there. Still on 18th, we are going to receive from Matthew. We are going to receive from who? From Matthew. So now, let us calculate our discount. Let us calculate our discount. I'm going to borrow some space here. So, originally Agnes was supposed to pay us 40,000. That's what Agnes was supposed to give us. But now we allowed a high discount of 5%. Discount of 5 what? Percent. And 5% is how much? Let's calculate here. Divide by 100 of 40,000. That is 500 what? Shillings. Hey, 2,000 shillings. Calculator is not okay. That is 2,000 shillings, not 500. So 2,000 shillings. 0.05 of 40. Yes, 2,000. So, if you allowed Agnes a discount of 2,000, so when you remove 2,000 from 40, that means Agnes is going to pay us how much? Is going to pay us 38,000 shillings. That's what Agnes is going to pay. So you come and record. In line with Agnes's name, discount allowed, how much is it? 2,000. Represents the 5% of 40,000. So you come in your discount column and record 2,000 shillings. It was by check, so that means you are going to receive the money in the bank what? Column. How much are we receiving? Remove 2,000 from 40,000. So we are receiving 38. So Agnes wrote a check of 38 what? 1,000. We are recording the discount. So that when you add 38 plus 2, then you go back to the original 40 before the discount. Okay, let us also look at Benjamin. Benjamin was supposed to give us how much money? Benjamin was supposed to give us 30,000. Benjamin was supposed to give us 30,000. Still, we gave Benjamin a discount of 5%, which is 1,005 what? 100. When you count, 1,005 what? 500 shillings. So when you subtract 1,500 shillings from 30,000, you remain with 28 what? 1,500. 28,500. So how much is the discount allowed? Okay, so the discount allowed is 1,500. How much is Benjamin going to give us in form of a check? The actual amount will be 28,500. So you come and record 28,500. 100. So that when you add the 2, then you go back to the would be original amount before the discount. Lastly, let us look at Matthew. Matthew was supposed to pay us 32,000. That's the amount Matthew was supposed to pay, 32,000. But now we allowed Matthew a discount of 5%. So how much did we reduce? 1,600 shillings. So 1,600 shillings, you remove it from the 32,000. You remove it from the 32,000. So implying that you remain with 30,400 shillings. So how much is the discount allowed? The discount allowed is 1,600. The discount allowed to Matthew. How much did Matthew pay us actually after the discount? Matthew gave us 30,400 shillings. So class, that is how we record our discount. So you just need to read the transaction, identify the discount, maybe percent or even given, identify the column which is discount allowed if you are receiving money, then what is the balance, post it there. So we have recorded the transaction on 18th. We have successfully recorded the transaction on 18th. Okay, we can proceed and record other transactions. So class, what is the next transaction? So our next transaction is there on 21st. Bought office furniture by check. So because we are buying, that means we are losing money. We are giving out money. So you go to the credit side of your cash book. You move to the credit side of the cash book. It was by check, implying that now it is bank which is going to lose, to give out. So you come, record your date on 21st. Bank gave out to what? To furniture. Gave out to furniture. How much was it? It was 30,000. So bank lost 30,000 to furniture. I believe now you are familiar with such transactions because we have seen a lot of them in the 2-column what? Cash book. Okay, we move on to the next transaction on 26th. Cash drawings. We said cash drawings is similar to a transaction which says withdrew cash from the business for personal use. Withdrew cash from the business for personal use is the same as cash drawings. And we said when you withdraw money for personal use, we term it as drawings. So because you are withdrawing money, that means cash is giving out. We are losing on the credit what? Side. It was not from the bank but cash. So implying that the cash column is going to lose. So you come and record your transaction on 26th. So these are drawings in the details column. How much was it? 5,000. Maybe this entrepreneur was hungry, wanted to buy food. But it's not a good practice to withdraw money from your business. You reduce on your capital. That's why you see the cash book is losing. So if every day you are withdrawing, you end up with zero capital. Okay. Then another transaction talks about on 28th. Paid salary shillings 8,000 less cash less 2% discount. Paid salary shillings 8,000 less 2% discount. So this time we are paying. 8,000, the amount you are supposed to pay Sarah. But because we are paying in time, she has allowed us, she has given us a discount of 2%. So implying that we are not going to pay Sarah all the 8,000. We are going to pay her less to what? Less 2%. 2% discount. So when you calculate 2%, 0.02 of 8,000, it gives us 160 shillings. 160 shillings. So our discount, the discount we received, because we are paying, it is a discount what? Received, is worth 160 shillings. So you come and record on 28th. We lost because we are paying who? Sarah. Discount received 160 shillings. So how much do we actually pay Sarah? So if you subtract, you remain with 7,840. So that is the amount of money we paid to Sarah. It was by cash. So you come in the cash column and write 7,840. 7,840 shillings. So, class, that is how we record the discounts in the 3-column cash book. So the only thing that is changing are the discount what? Columns. The discount columns. So you can complete the remaining transactions, 2 or 3, then we can add on from there next time we meet. Have a good day. Two or 3, then we can add on from there next time we